day, dear traders, let us review the major economic events of the past week. The US dollar index advanced slightly last week, meanwhile the euro slipped. Their fluctuations were determined by negotiations between Greece and the European Union about the Greek debt. Last week, the information on the progress on Greek debt negotiations was contradictory. Greece and Eurozone agreed on 4-month bailout extension on Friday, with Greece paying its debt in full. That reduces the Greek default risk and the chances for so-called Brexit, the country's withdrawal from the EU. The euro weakened as investors expect Greek financial problems to be solved mostly by means of the ECB money printing. The US dollar strengthened on this backdrop. Thus, the political factor overshadowed the economic performance. On the whole, the US economic indicators performed weaker than the European ones last week. The main negative factor for the dollar were the Federal Open Market Committee meeting minutes released on Wednesday. They contained opinions that a too prompt rate hike may halt the growth of the US economy. Moreover, for the first time since January 2013, the minutes recorded that the unstable global economy, which is expressed in the Chinese slowdown and the tensions in the Middle East and Ukraine, may negatively impact the US GDP growth rate. We deem that the Forex market trends this week will again almost completely be defined by the events in the United States. Fed Chair Janet Yellen will testify on the monetary policy before the Senate Banking Committee at 15:00 Central European Time on Tuesday. US consumer confidence will be published at the same time. Janet Yellen will also speak before the US House Committee on Financial Services on Wednesday, and new home sales will also be released the same day. In our opinion, the outlook for the indicators is negative for the dollar. But on Thursday, we expect quite positive data on the American CPI, durable goods orders, and unemployment claims. The second release of US fourth quarter GDP will be published on Friday. According to forecasts, it will be cut from 2.6% of the first estimate down to 2%. If the official release coincides with forecasts, the investor reaction is likely to be neutral or moderately negative. However, some investment banks expect the GDP to be revised downward to 1.6 to 1.8%. We believe in this case the markets may plunge. This was all for this week. Thank you. See you next week.